Hey guys, Darren here. Thanks for joining the Stock Option Market Weekly Update for the week of August 28th, 2023. We've got a great week ahead of us, and we had a good week last week. We're going to touch on where we are in the market today. We're going to talk about some of the general economic data that we have right now, and we're going to go through the trades that we have on the option trading platform. We had a pretty good week with earnings, so we're going to cover those and what we did last week and what we've got going forward this week. I think it's important to understand all the different strategies so that we can understand how the rich are getting richer, and we'll have the tools to do the same efficiently and safely. I promise we're going to dig into many detailed option trading tips and tricks. So please go ahead and hit that like button and subscribe if you haven't already so that you're notified of future option trading videos. Also, be sure and download the free options workshop in the link below. It talks about the two main benefits of trading options over buying stocks outright. And disclaimer, I'm not a financial planner. Please do your own research, and if you're new or learning options, I recommend you start small. Okay, so we started the week. This is a week-to-date chart on TradingView, and we started at 43.69, and we ended the week up at 44.06 over here. So we were up slightly for the week, and if we go to the overall, I've got a lot of trend lines and levels on this, but this is the S&P since what, 2017, the SPX, and you can see that actually, let's look at year to date. If we look at the year to date, we're still up 13%. We started the year at 38.24, and again we're up at that 44.06 level now, so still up 13% year to date. I'm only less than 50% invested in options. I've got money on the sidelines, and I still think that there could be a drop coming before the end of the year, and I still think things are going to trade in a range and be a little choppy. Let's see. Big news for the week. Let's look at, let's see what the sectorspiders.com, we can look at the different sectors. So over the last week, we had consumer discretionary up a percentage point, and technology up a couple of percentage points. So, year to date, again, communication, consumer, and technology are all up. Energy's kind of at a up high. Crude's up around $80 per barrel. We'll talk about that when we get into the individual stock trades. CME Fed tool. So actually, Jerome Powell came out this week. He spoke at Jackson Hole, a big speech, and I didn't think too much was going to come about it, but he basically said he's going to do whatever it takes to curb inflation, keep rates higher for a longer period of time possibly. And you can see here on the Fed interest rates, it actually shows that we're not expected to have an interest rate cut until June of next year now, down to 5 to 5.25. Right now we're at 5.25 to 5.5. You can see. And all the way, that is still favored, as we go December, January, March, still 5.25 to 5.5, May. And I think last week it was still at May when we expected to have the cut. This week it's moved out to June, so a little bit longer, just like Powell said at his Jackson Hole speech. So kind of in line. Next week, we've got some different economic reports coming out. We've got consumer confidence on Tuesday. We've got PCE numbers coming out Thursday, and unemployment on Friday. So with that, let's jump into some of the trades that we have on now and made last week. So the first one's a futures options trade, and it's corn, and we've had this on a little while. It still hasn't moved much, but we're good above 470. It's at 487. We can see we're still at, the lows for over the last year. So I'm expecting that to move up. If we go to curve mode, and again, this is the Tastytrade option trading platform. I will put a link down below. If you use the link, it helps out the channel. We get a small fee. If you fund with at least $2,000, and you really need around $2,000 at least to place a few different trades. So you can see the profit zone in green, profitable below 470, but definitely we get the full premium above 470 on what we put on. And it looks like right now we've made $30. We've got another 125 left to go. So we put on the trade for what, 155. But in good shape on corn. Wheat, same thing. Very similar, trades similar to corn, but we're at lows again. And we've got the same situation, just very similar trade. Analog Devices came out with earnings last week. Well, actually, you know what? I'm going to do one before that. AAP, Advanced Auto Parts. I look at the earnings every week, and you can see this. If you go on the left here and you go to earnings, you can look at all earnings, and then you can come over and you can sort by the date. So you can see, and this is after the bell, and this is before the bell. So before the market opens and after the market opens. So on Monday after the bell, for instance, HEI, Heiko, I don't even know the company, but there are some, looks like CrowdStrike has earnings next week on the 30th. So that's what, Wednesday after the bell. So that's kind of what I look like for earnings. And last week, I put on AAP. So I will go through that because it was a quick winner and I closed it out. So AAP, Advanced Auto Parts, I did a little research. It's at lows. The chart looks horrible, but it actually is fundamentally a pretty sound company, and they could be bought by somebody. But I looked, and I don't think just the value of it couldn't move down much further. But we put on a trade before earnings and collected $1.83 on the 22nd. So what is that, Tuesday? And then we closed Wednesday morning when the market opened at 6:30. You can see for 39 cents, and we made a quick 144 bucks. So those are the trades that I look for. And the way I'll have to do a video and show the criteria, but I want to collect a third the width of the strike. And sometimes I'll go the nearest option chain. Yeah, I did the 3 days so I did that August 25th last Friday. In order, the IVR is typically highest in that first week after earnings, but sometimes I go to the regular option chain as well, and I think I've got one coming up where I did that, even though just because in the upcoming closer to expiration date you couldn't collect enough premium to do it, so wanted to have a little bit more time. But that's AAP. Then we'll move on to Analog Devices. This one, 165, 160, 165, 190, 195, Iron Condor. Stock is trading at 178, so we're right in the middle. If we look at we're dead center in the middle. And we've got 20 days left. We've collected $90, only 65 more to go, but it does look like we're going to stay in that range. So I may collect a little bit more and close out next week, not wait the full 20 days because IVR is a little bit low. And you can see the trade that we put on just last week, the 22nd, and collected 155. And then we've still got it on. What am I talking about? All right. AMD is the next one. We've got a couple different Iron Condors on here. It did drop. It's dropped recently down to 102. So we're at the bottom end of our range, but we're still profitable. And I don't think AMD, I mean, it's a good company. And I think they're going to stay above that point, before expiration. But you can see, just in the last 30 days, we've made $171 doing a few of those different trades. Bank of America, banks still, I think until the economy turns, probably next year, are going to be down for a while. So I may need to rethink these. I like owning the banks, but it may take some time. But you know, I still need it to come up to 34 before I start making money. But I always like to have some banks on. Costco, I believe they, let's see. So last Monday I sold the 510, 515, 560, 565 iron condor with only 25 days to expiration, and there had been a recent move down right here. So and IVR is pretty high. So we were able to collect $166. We've made 61 of that so far. We're still in a good spot, in a good range with 20 days to expiration. Probably leave that one on a little bit more, collect a little bit more of that premium, and then close it out. DraftKings, you know, I like DraftKings. I'm long a couple of leaps options. We've sold some calls against those, and basically a strangle here at 28. And we actually moved up. It was down below that last week. I think it was at 26 last week. Yeah, it got down here below 26 and popped up to 28. So that helped us a little bit. And you know, we can look at just over the last year, we've done pretty good in there. And $900 profit, $928 over the last 365 days. And we're in good shape there. I actually like where we are. We're in the profit zone there, in a good position. So we're going to hang on to that. IVR is low, so you know I don't want to roll out because we're probably not going to collect a lot of premium at this stage. So I'll probably just let the IVR come in. We've got quite a bit left to come in next, you know, over the next couple of weeks. Enphase actually had a big move down. Chart's not too pretty. I do like the stock, microinverters and solar. Actually, you know what? We missed one. Dix, I traded one of those earnings plays last week, and it was at a high. It's in retail. I was thinking it wasn't going to be a real good play, so I actually sold a call credit spread, and I did that mainly just because it was at high. So I knew that, hey, it's not gonna, even if it beats, it's probably not gonna take off and rocket up a lot further. May move a little further if it comes out and they beat, but I had a feeling that hey, maybe they won't beat, and even if they do, I'm not going to get hurt too much on the upside. But if, as suspected, they don't have good earnings, you know, then I'm going to make a quick profit. So that's what I did. This one, again, I didn't do that Friday of last week close. I went and did the September 25 DTE and collected $176, and then we closed it for $3 the day after because of that big drop. It was easy to do, so we profited a quick $173 on that one. So that was a good earnings trade for us. Okay, here's Enphase. So we talked about that a little. It's at 124, so it did drop last week from 130. Keeps going down, but hey, I am long Enphase, but IVR is so low now, so we've got to determine what we're going to do going forward. But I did put on actually a 120, 115 last week, the October, just because it is at lows and I like the stock. So I sold another put credit spread and, you know, yeah, put credit spread and collected some more premium. So we're going to hang in there. I think what happened last week is the Wall Street Journal came out and they had a report, and it didn't talk. Oh, you know what? I'm sorry. I'm talking about it. I'm thinking of a different stock. Never mind. We'll talk. We've got that one coming up. All right, FCX, 36, 32, and 41.46 iron condor. I think we're right in the middle of the profit range. Yep. We've collected 33. We've got 66 more. We'll look to close. We're inside of 20 days. So any big move up, and I'll probably close out of it. IVRs are very low at 4, but I am long. The FCX has copper, gold. They're a mining company, and a good one. First Solar. Let's see what we did there. First Solar, we sold an iron condor, and it is the 150 220. And if you look at the chart, what happened? Not Golding, First Solar. All right. If you look at the chart, we sold the 150 220 hour short strikes. So 1 year, so 150 is down here, and you can see there's quite a bit of support down here around the 150 level, and then the 220 is really the top of the range. So we have both support and resistance that our iron condor is falling within, and we're right in the middle of it. And IVR was good when we put it on. I think it was 23. Now it's dropped to 13. So we've collected a little premium, but we've got $196 more to go there. And we can look at the 30-day. You can see, yeah, here's the 206 that we collected, that we placed the trade for. So a little bit, it's a $10 wide. We typically want to collect a third the width of the strikes, but it's a little bit less. But I wanted to go a little bit wider because of the support and the resistance levels. And hey, I'll take $200 and with a little bit higher probability of staying within that range. Google, long Google, they're a behemoth, and even though they are at highs, I hate to short Google because they're such a good company. But we're at 129. We were just at that level last week. IVR is still pretty low, so we're just gonna hang on to Google right now and not roll yet because IVR is low. IWM, Russell. I've been long Russell, short NASDAQ, so this one's not been going our way, but we're 193, 188. We need it to move up a little. We're down at 183, so we're down at this range. We needed to move up there. Lowe's. I think Lowe's had earnings Tuesday, and again, I got this one off the earnings search, and I did an iron condor, and we collected $156 of what it paid, so a little bit, $5 wide, so almost a third the width of the strike, and we made 48 of that already. Earnings came out, and we're still within that range, so we're looking good. We're going to hang on a little bit longer and close out in the next couple of weeks as we make more of that 108 left. Medtronic, another earnings play. So there were quite a few earnings plays last week. 77 to 86. This one doesn't seem to move a lot, and they're doing medical devices, and it's been trading. You can see it within a range, but we put that trade on, and collected $100, and we've made 87 of it so far. So we could probably close that out. There's only $15 left to trade, and 20 days left. $15 left to make, but I'll probably close that out next week. Medical properties. This is the one that I was thinking about. But the Wall Street Journal came out with an article with there being lots of short interest in medical properties. There's two main hospital chains that are taking really hurting them, and it's really due to the government and being slow in the refunds for COVID, and then the procedures not all the way up to speed yet. So they've been hit, these two hospital chains that are part of the medical properties REIT, a real estate investment trust portfolio, and they've really hurt the stock, and some people are panicking. But I think medical properties did cut their dividend. They had 11% dividend or 12%, and I think they cut it in half. So it's still 6 or 7%. It's still huge, but they've got cash reserves. They're going to make it. They actually picked up more stock in these healthcare chains that are down, and they're helping them with the financing. And they are the biggest healthcare REIT. Whether they're too big to fail, I guess we'll find out. But I'm not gonna I'm gonna hang on to my 400 shares and bet long term. I'm not gonna panic and sell when others are, because I think it can easily, as things improve, you know, get way up there in price. So I'm gonna hang on right now. Nvidia, all right, that one's closed out. You see, we don't have anything here showing Nvidia. That's because we closed out last week. If we look at the 30-day, we made $200 in the last 30 days. But the trade that I put on, you can see on the 23rd, so Wednesday before the close, I did a video and I think it showed collecting, making a quick $350. We only made 320 because I actually did recenter. I went a little bit wider, but a $10 width of the spread, collected almost a third, $320. And then earnings came out and we were well within the range and closed out for $1. So we made $319, in one day basically on that trade. So it worked out like we wanted. I had some other trades on. So you can see overall I only made $200 because I had some other trades on that I closed out as well. But Nvidia did well for us. Let's see. I think Palantir is next. Yep, I like Palantir. We're down at the low end of the range. It seems to trade between that, 14 level and 20, and we're down at the lower end. So I hopefully I'm a little bit long. Yeah, I need it to move up to 16 in order to be profitable going forward. But just over the last 30 days, we made $940 in Palantir, so it's been doing pretty well for us. But we need it to move up, in the next couple of weeks. PayPal, we've got a credit spread, or a put credit spread that we sold 60-65, a good company. We need it to move up. If the bull market keeps being bullish and moving up, I think PayPal will be fine. They are still, at the low end of the range, but good fundamentals, good company. Qs, I've been being short against since they're, up there when compared to the Russell and the S&P. So I've been short the Qs and done pretty well, over the last 30 days, $324 just being short the Qs. So as the market moves down, I take profits in the Qs, and then when the market moves up, my other the other positions do well. So it's good to trade both sides of the market, and that's what we're doing. Also do that with SPX, which I know there's been some interest in the 0 DTE SPX options, and I've got that coming up as well that I will cover. SoFi is next though, and it's been down, it's been hurt, but long term they're great. I am long SoFi and will be for the next several years unless the stock just skyrockets up, but it's going to do well. SOXL is that semiconductor stock, and it's hanging in there just above our 20. We've got 20 days left, so we're going to stay long. TDOC, same. I'm going to come back to SPX and do that one last. But TDOC, we've done pretty well in that. If you look over the last, year, $844. So we're just trading that long. The only thing that we have on right now is a leaps option. So big move up, I'll sell a call against it. Big move down, I'll either buy another leaps if IVR is low and it's at 0 right now, or if it were to tick up, maybe I'd sell a put against it, but IVR is too low right now. Bonds, I put on a bond trade. Bonds are 30-year bond, long-term bonds were at lows, all-time lows over the last year. So I just went long, sold the credit spread, and collected. I haven't traded this a lot, but collected $97, and we made 27 of that. so far. But Toll Brothers, I think this might have been another earnings play. And yeah, I bet against it probably because it's at highs. Yeah, it was up here. I figured kind of similar to Dick's. I didn't think no matter what earnings came out, even if they were great, that it could skyrocket up much further. So I placed a call credit spread against it, collected $111. We've made 16 so far. I'm going to let that come in over the next couple of weeks and hope it doesn't go back past the short strike. We're profitable as long as it stays below, and right now we're at 77. Let's see, Tesla. We closed out last week, but let's see where Tesla's at. IBR is low at 8.2, so that's why I didn't put another trade back on. But you know, if it drops more, I'll go long. I might sell an iron condor, but Tesla is always a pretty good stock for us to trade. And let's see, over the last year, yeah, $245. So we actually lost some of that recently, but we're still up 245 for the year over the last year in Tesla. So we talked about Toll, Verizon. I decided to buy some shares, 100 shares. It's a big dividend payer. I think it's got like a 7 or 8% dividend. So there was a down day, and I know Verizon's good long term, so just bought some shares, collect that dividend, and then Wells Fargo have a leaps on along the banks, and Wells Fargo's actually done pretty well for us. All right, let's get back to SPX. SPX 0DTE. Last week, what did we do? Let me see. We go 30 days. So we made $420 in the last 30 days trading these SPX call credit spreads. And it was a interesting week. So Monday, I think the 21st, yeah, I started out with the 43.75, 43.80 call credit spread, collected 255 on a $5 wide. So it's basically a 50-50 shot. By the end of the day, it didn't go our way. So I rolled out and I rolled up and out. So you can see I rolled up to the 43.95. So I closed out the 43.75, 43.80 and rolled up to the 43.95, 44.05. So now I'm at a $10 wide with $3 collected. On the 22nd, 10 a.m., it moved in our favor. So I closed out for 260 just to get out of the $5 wide. So I only made 45. Actually, going back though, on the 21st, I did a quick, before that trade, when the market opened at 6:58 or 30 minutes after it opened, I did the 43.90, 43.95 for 250 collected, sold it for $1.50, made a quick $100. Put it back on, and then that's where we kicked in there, and then made another $45. So we were up. Then on the 22nd, we did the same thing. We sold the call credit spread, collected 255, ended up rolling it for 50 cents, closed for 390. So here I lost $85, but I got out of the $10 wide spread. I was still up for the week. And then here is where I kind of messed up. I'll be honest with you guys. I was trading from my phone at this time. I went to the gym to work out and tried it on my phone, the mobile app. And I don't know, I don't use the mobile app much at all, but I ended up selling near the end of the day, right before the close. I tried to close out the trade, but ended up making, on accident, $345 on this trade. So, hey, you know, 50-50 shot on all these things. But I'll be honest with you, I got lucky here. And then on the 24th, I actually put on a debit spread Anyway, I ended up losing $55 on this trade as well. But yeah, I need to probably break down and do a video on this and show in more detail. But you can see we've made 420 over the last week. Um, but let's go back. So Wednesday, I've got some notes here. On 8/23, I rolled to the 1-day for a $50 credit and widened to the $10 wide. Then on Thursday, it opened higher. At 7:31, it moved down. I closed out for 390. Just wanted to get out of the $10 wide. Now I was at $145 up for Monday and Tuesday, then 305 for Wednesday, minus 390 Thursday. So I was up 60 bucks. And then Thursday, I sold that call credit spread for 345 on my phone, and it expired worthless for 345. So that one really helped me out. Now it was up 405 for the week. And then I did a call debit spread for 295. That's when I did it by accident in the car and on my mobile. I was parked, I wasn't driving. And I closed for 240 to get out when I realized I made a mistake. So overall, I was up 350 for the week. Got a little bit lucky, but I'm going to keep the SPX 0 DTE going and try to explain a little bit more clear next time and do a video on it once I get a little bit more data. But you can see I am trading that pretty consistently for the week, and I'm going to go at it next week, and I will share the results. If you don't mind, please let me know if you're trading 0 DTE SPX and do the same. Please share the results. Let me know any questions that you have. I will answer them in the comments below, and let me know what you're trading. Please make sure you hit the like and subscribe buttons, and look forward to seeing you in the next one.